Hello traders, this is Alla Peters, founder of Fibonacci Trading Institute and developer of proprietary Fibonacci method. I'm very excited to be here with you and I look forward answering your questions and sharing how you can benefit from Fibonacci strategies in your day trading and position trading decisions. First, please remember, everything I do in this webinar, I do for education purposes only. And I look forward sharing with you how using Fibonacci can benefit you in trading and investment decisions. Until 2008, I believed in fundamentals. Until 2008, I used indicators. In 2008, when market went into free fall and stocks with solid earnings and indicators that were pointing to holding the positions were crashing, I started questioning everything about the markets. This is a stock I was holding in 2008, famous Chesapeake Energy, one of the top energy stocks in US. When this stock kept crashing, all the fundamentals, all the indicators were pointing to holding this stock as long position. Chesapeake Energy collapsed from 74 level all the way to 4. Despite fundamentals, despite indicators. In 2008, I was fortunate enough to spend time with the markets, to start studying charts, to start recognizing that the same exact patterns keep developing on any instrument, any time frame, any platform, every day, every time. I recognized very, very clearly that market is Fibonacci puzzle. And that's what I've been teaching since 2011 to traders from beginner to hedge fund trader, using exact same Fibonacci tool and exact same Fibonacci strategies that I demonstrate in the trading room daily. Here's exact same chart from day trading room. Here exact same reversal zone you saw on Chesapeake Energy. This is where sell-off had started on S&P yesterday morning from. Identical strategy, identical level. And this is where S&P went into free fall. This morning, I recorded videos that will be in this weekend's newsletter. When we discuss since early morning, longs are not an option. Fibonacci resistance present in front of you. Entry into this level will not work. This is where sell-off started again this morning. And this is what played out for the remainder of the day. Let me find you charts that I can show you a little bit later in the presentation of the event that played out in the trading room. So, these exact same levels applied to any instrument, any time frame, any platform you can use and you can choose to trade. And that is a short from the trading room this morning. From this area, from very bright pink line, decision point 1 on S&P this morning, where market sold off from. This is exact same chart on Apple. Identical strategy, identical levels. On Apple, this is key resistance right now, where Apple had been frozen since late fall 2017 and struggling to break through. An exact same level where Apple rallied from, key Fibonacci support despite worst earnings in 13 years. All the levels identified before they reached, as Fibonacci is the only natural predictive tool in the market. So, if you would take a look on this chart on Apple from April 2016, do you remember this? Apple at 792 area. This is when Apple came out with horrific earnings. And this is when Apple respected this Fibonacci support again. Horrific earnings did not mean a thing. Apple rallied. Just like spectacular fundamentals and earnings on Chesapeake Energy at reversal zone did not mean a thing, and Chesapeake Energy collapsed, confirming one thing clearly and one thing only. Fibonacci will override any news, any indicators, any events. Market is flawless Fibonacci puzzle, preset by the only predictive natural tool in the market. Fibonacci sequence that even Einstein mentions in his theory of relativity. Identical accuracy on 1-minute chart, as on Apple long term, as on any instrument long term. Here's a couple of other examples. Here is Euro. Remember this support on Euro? This is a chart from 2015. When I said response by buyers at this level is crucial. This is where Euro skyrocketed from, just like Apple, despite very negative events in Europe. This is exact same formula where Facebook is struggling immensely right now. Identical price action as you saw on S&P this morning in the trading room. Price action remains the same, nothing changes. The only difference, risk management and trader psychology. What chart you choose to trade, what instrument, absolutely up to you. This exact same tool applies to any instrument, any platform, any time frame. You can trade futures, stocks, options, Forex, ETFs, using proprietary 4 key rules for entry and Fibonacci for exits. So here's a little test I like to do in the room. Here is 5-minute chart on S&P. If I will remove the name from the chart, you will not have a clue what instrument this is, because it doesn't matter. The only thing that matters is price action. So let's do the quiz in the room and let's see what instrument is this. No one knows. The only thing that's constant is price. What instrument this is does not matter. You master this, you master price action patterns, you apply Fibonacci levels, and you can trade any instrument. If you found strategy that works, it should work on any instrument and any time frame, because price remains the same. This, in fact, is oil, not S&P. And if I will change the name on the instrument next, just to confirm it is oil, one person recognized that it is correct. What about this one? Chart loading up. Does anyone know? What is this? No one knows. Does not matter. The only thing that's constant between S&P, between oil and euro is price. Price the same everywhere. Master this. Go to the source after which indicators developed after, and recognize. If indicators and news worked, everyone would be Bill Gates. The only thing that's constant in the market is price, and price repeating exact same patterns on any instrument, any time frame, any platform. Identical Fibonacci level where S&P is struggling currently is present on McDonald's. The same support. And if I walk down memory lane and will show you all of these levels before, let's take a look on oil, shall we? This was oil in February 2016. Do you remember oil at 29? Do you remember word reversal zone? This is what oil had done next. Reversed. Absolutely no surprise whatsoever. This is what price does at reversal zone. Complete trend reversal, 80+% of the time. That's what oil had done. No surprise whatsoever. And this is where oil is now. Selling off from this level. Fibonacci resistance present in the room for years. An exact same struggle on oil as you saw in the trading room this morning on S&P at this famous 55 level, which became key resistance for over a year and next key support. Knowledgeable trader never enters into institutional resistance, identified years in advance. Exact same formula across all instruments, exact same price action patterns. Here's an example on gold. This is what I said on gold in February 2016 when gold was at 1128. I said if 1128 is broken, 1200 will follow. If 1200 is broken, 1300 will follow. And this is what played out next. Gold skyrocketed to much higher level. No surprise whatsoever. Exact same thing in constant between oil and gold at the start of 2016. They both were at trend inception, at reversal zone. Just like S&P yesterday morning at trend reversal, reversal zone. Formations as playing out currently in the market are historical traders. And this is what we're discussing with students in Fibonacci Mastery course. As institutional reversal levels had been reached on indexes across the board. This is a chart on S&P, just to remind you. In February 2016, monthly chart, famous 1800 number that correlated very, very clearly with trend inception on weekly and struggled as expected at the end of the minor trend, bright pink line. When this bright pink line was finally broken, this is what S&P had done. Skyrocketed after trying for more than 7 months. Trend became major and reached reversal zone. This is the beginning of spectacular sell-off that we expected and we identified months in advance. This is what we discussed with students before historical Monday when markets crashed thousands of points. This is what's holding this sell-off, this key Fibonacci support. Right now market only in bullish correction. Right now what's holding this market is this support. On this chart, sellers fully in charge. It's only a matter of this support being taken out. This support is out, market in free fall. Identical structure as you just saw on hourly chart. Exact same formula, all the same. Which instrument you will choose to trade, absolutely up to you. Choice is yours. Identical formula as Chesapeake Energy. all the same. Identical formula as you remember on euro, when euro reached reversal zone in 2014. Do you remember 3900 number? Do you remember when euro sold off? That's what you witness in the trading room daily. This is the accuracy of the method, traded by traders from beginner to hedge fund trader in US and globally. No software, no indicators of any kind. This is rule-based method that helps you with discipline, that helps you identifying where to enter and where to exit market structure using Fibonacci levels and pure price only. Method that you can trade on any platform, any instrument you will choose. So what is Fibonacci? What separates Fibonacci from indicators is the most important part, that Fibonacci is natural predictive tool that's present in everything that surrounds us. In universe, in continents, in weather patterns, in flowers, in the reflection in the mirror, where all these spirals and triangles and rectangles keep repeating in the market time and time again. This is a series of connected circles that you can see clearly in front of you on seashell, which is identical to trend inception formula, which is a key to Fibonacci method. If you know where trend inception is, you know extremely well where trend will end. And that's what's playing out currently across multiple indexes in the markets. And that's what played out recently on oil. Remember the reversal zone? Remember Chesapeake Energy? Remember euro? Remember Apple? Remember gold? It's all the same formula. Reversal zone is reached. Oil collapsed. This is the end of the minor trend that oil cannot break through. And that's the key to the method, using this golden ratio that show you far in advance where trend inception and exits on your position are. Advantages of trading with Fibonacci are: this is naturally predictive tools that give you trend inception, trend reversal, target exit, profit targets, minutes, hours, days, weeks, and months in advance. The only difference, are you day trader? Are you position trader? Are you options trader? That is the only difference that will separate how far in advance you know these levels. This mathematical sequence, this Fibonacci tool, can be installed on any platform you can choose to trade. Fibonacci is a highly accurate key concept for profit targets, which is essential in day trading in position exits. Fibonacci is the only natural predictive tool that will show you these levels in advance. Fibonacci retracements are key to Fibonacci Trading Institute methods. When Fibonacci retracements used with strict set of rules that will show trader high accuracy trade targets using exact same set of rules on any instrument, any platform, any time frame. Fibonacci retracements cannot be traded without strict set of rules. If you take this chart, which you used to learn in the course as your key parameter chart, Fibonacci tool placed in entirely different place than indicators. Fibonacci, not artificial, not delayed. Knowing, however, how to use Fibonacci, you must know the rules. and that remains constant. Knowledge is power. Proper use of Fibonacci is essential in the markets. Pure price for entry and Fibonacci for exits is a key concept that works on any instrument and any time frame. Fixed stops and speculative entries will not work. Price shows where entry is and stop should be. Fibonacci retracements determine where accurate targets should be. So, if you will remove all the indicators from your charts will look like this. Pure and clean. And if you just unblock your vision and start paying attention to this price action patterns, you will see they're all the same. No matter if it's euro, no matter if it's pound, no matter if it's Bank of America, no matter if it's Amazon, no matter if it's oil, it's all the same. No conflicting signals, no unnecessary variables, no blurry vision on the market. Only clear, focused mindset and logical way to analyze and trade the markets. This Fibonacci tool will give you extremely high accuracy on your exits and profit targets. So, how is Fibonacci calculated? How this sequence creates repeated price action patterns. Fibonacci sequence starts from number 1. Each number creates the following sum that consists from the previous 2. 0 plus 1 is 1, 1 plus 2 is 3, 3 plus 5 is 8, 5 plus 8, 13, and so on. These are the core Fibonacci numbers. All the other numbers are not important. All the other numbers do not matter. And this golden ratio is what forms the markets. Trading Fibonacci numbers properly is the key. So, here's the basic lessons on the method. This is what I teach in the course, day 1. Major trend consists of 5 Fibonacci waves. Knowledgeable trader takes advantage of trend inception at wave 1, which is number of examples I had shown you, such as oil, trend inception. Remember this? Oil at 26, reversal zone. Such as S&P at famous 1800 number, reversal zone, trend inception, take a trade if rules are met. This is also trend inception to the downside. Knowing how to trade this, you must know the rules. Placing random speculative trade will never work. When counter trend wave 2 is present, knowledgeable trader would absolutely ignore that structure. Trading against the trend is never an option. Trading with the trend on wave 1 and wave 3 is your second opportunity to enter the markets. Trading on wave 4 is not an option, counter trend move. Very last, trend inception. Only wave 3, never wave 4. Knowledgeable trader never acquires position at the end of wave 3. It will never work. It means trader is taking an entry into trend reversal levels, which is exactly what played out on oil recently at reversal zone, when oil came out with extremely bullish news, but bullish news did not matter. Buying into it was not an option. Rules are met, take short. Identical structure as on Chesapeake Energy, as on Euro, as on all the other instruments I had shown you. Identical formula applies. So here's 5-way price action pattern on Nasdaq. Price formed very strong trend pattern consisting of 5 waves and reversed from Fibonacci levels. This is exact same pattern that keeps forming time and time again, with wave 3 being key pattern, absolutely crucial on any instrument, any time frame, which acts in exact same fashion to the upside and to the downside. But trader who chooses to short this late is asking for trouble. Shorts here, not an option. Here's exact same example on Euro hourly. Spectacular trend, powerful trend inception entry at wave 1. Very weak counter trend wave 2. Very powerful bullish push all the way until Fibonacci reversal area, where powerful trend did not mean a thing as Euro reversed. And this exact same formula applies to oil. When oil staged very powerful trend inception but struggled to break through these Fibonacci levels. Time and time again, identical formula. Buying at the end of wave 3, not an option, where oil had stopped completely. This pattern on Google is one of the cleanest and clearest patterns. This pattern on Google formed 5-wave formation, reached Fibonacci levels, and reversed completely. And that's what price does every time, no matter what instrument, no matter what time frame. And this is exact same method that I've been teaching to traders from beginner to hedge fund manager. Traders who trade various instruments, various time frames from S&P Emini to stocks, Forex, and options. Students on the website share what they trade and how. And one of the most important events of the year is setting up in the months of March. In the months of March, we have the first Fibonacci Trading Bootcamp. Fibonacci Trading Bootcamp is the event that plays out only a couple of times per year that's included in Fibonacci Mastery course fee. Group course 8 weeks includes Fibonacci Trading Bootcamp at no cost to new students. Private mentoring 16 weeks includes 2 weeks Fibonacci Trading Bootcamp at no cost to new students. When we are in a bootcamp, we are in live trading environment where I teach and quiz you daily. This is where you learn basic strategies as well as additional strategies that's not part of regular course. You learn rule-based Fibonacci strategies with stop, entry, and targets during intense 2 weeks of trading and training environment. You learn what charts to trade, what charts not to trade. You learn how to utilize the power of the trend. You learn how to use Genesis rules. You learn when not to trade corrective and slow markets. Money management and trader psychology will be addressed throughout the bootcamp. When Genesis is not in a play, we will be mastering basic strategies, all during 10 intense trading days in Fibonacci Trading Bootcamp. On the website under Learn, you can also review the information about Fibonacci Mastery course, which will be reminder of 8 weeks in group sessions. All classes are live, modules are supplemental, and as always, most important part of the website, where you can listen to the students and graduates of the course who trade stocks, options, Forex, futures. Graduates come to the course and quite often share what they trade. If you would like to join us, please review the information on the website and never ever hesitate to contact me. 925-257-4298 or info fibinstitute.com. If you have any questions, traders, please do ask. Any questions about any instrument, about any time frame, I will gladly answer. Yes, this is chart of S&P Emini future. Every single broker, every single platform has a different symbol for S&P Mini Future. On NinjaTrader, it is ES. In the course, you learn key levels for your trade entries. In the course, you learn all the strategies, all the numbers that you need to know in your trading. Another question I'm receiving about Facebook. What is Facebook doing now? What is Facebook doing now? Let's take a look. No matter what instrument you trade, no matter what time frame, you always using exact same formula. So this is Facebook. We're taking a look on the short-term chart, such as daily. Remember, on weekly chart, Facebook at the end of the minor trend. Everybody is seeing this? This is Facebook daily. Identical formula. Identical screenshot as weekly. Facebook struggled to break through the end of the minor trend. Facebook collapsed completely. Buyers are weak. Facebook selling off just like the rest of the market. Next question I received about Nasdaq. Nasdaq coming up. If you want to trade with institutions and not against institutions, you always and forever must know weekly charts. So here's a weekly chart on Nasdaq. Here's identical structure. Remember the end of the minor trend on oil on S&P? This was the end of the minor trend on Nasdaq. 5,000 area. Nasdaq blasted through, and this is where Nasdaq is now. Selling off just like S&P, as Nasdaq reached institutional reversal zone. Next question, what is pound doing now? Let's take a look. Actually, I had not received question on pound in a long time. Pound weekly selling off, traders. Pound reached reversal zone again. In order to place a trade in the market, you must know the rules. You cannot speculate and place a trade randomly. You must absolutely know where your stop and where your targets are. Here is pound. And here is the reminder. Reversal zone is present. Exit the position. So, if you browse memory lane, this was pound at the end of the minor trend, where pound struggled for more than 6 months. The end of the minor trend is broken, pound skyrocketed until this reversal zone. Pound selling off, and had been so for the last 6 weeks. Next question, Google. Every single instrument traders at reversal zone. Every single instrument in bearish correction that I'm being asked for. Take a look. This is Google. Google selling off just like S&P because it reached reversal zone. Very last question about pound yen, GBPJPY. If you have any other questions, please do ask. Pound yen also selling off. Pound yen had not reached yet reversal zone. Pound yen in drastically different market structure. Pound yen at the end of the minor trend. Take a look. So, if you know where Fibonacci levels are, you know extremely well where to enter and where to exit your position. This is the end of the minor trend. Pound yen never made it to reversal zone. As you remember, it taken oil more than a year to break through 55 level. So, if you would like to join us, please review the information on the website and never hesitate to contact me, as all the information on the website posted under Learn. So please review the information about the course, the information about the bootcamp, and if you have any questions, never hesitate to call or email me 925-257-4298 or info@fibinstitute.com. Thank you, traders. Thank you so much. It's my joy and pleasure being with you. You will be receiving an invitation to the trading room on Tuesday. If you would like to sign up for the trading room sooner, you can certainly do so under subscribe on the website. Thank you so much. Have a beautiful afternoon. Bye bye.